Tuesday, February 26, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about why central banks and their policies of the last 11 years are solely to blame for the housing market affordability crisis, as it's called, or you could call the real estate or property market bubble that continues to exist all over the Western world, especially here in the UK. We always hear in the mainstream press, mainstream media, people talk about this, and they never really blame the main culprits, which are the central bankers and their policies of almost zero interest rates, money printing, and keeping the banks, commercial banks' balance sheets whole. And we know that the great majority of UK bank balance sheets are assets related to housing. So no one talks about this, and today I want to prove that that's the only reason why young people and many other people, not just young people, cannot afford to buy a house. Even the rents have gone up, and that's another problem as well. So that's what I will be covering today. Before that, I'll look at what the markets are doing. It's fairly early right now. It's just before 7 a.m. London. So let's see what we're doing. Spot gold this morning trading 1327.50, so unchanged. Silver 1587, down about a cent. The range has been 1595 to 1585. The range in gold, by the way, has been 1330 to 1326.50. The Dow future is down 75 at 26,018. The low has been just below 26,000. S&P is down about 10 points, 2786, or 1/3%. NASDAQ 100 future is down 35 at 7,078. The pound has been strengthening a little bit yesterday, and it continues to strengthen today. We're at 131.34, up almost 1/3%. Euro 113.50, down 7 pips. And the dollar is down 1/4% against the yen at 110.82. Dollar also rebounding 1/4% against the Chinese yuan, 669.80. And crude oil has come off a little bit here in the last day or so. We're now back below 56. WTI, it's at 55.40, down about 1/3%. Brent is at 64.80, or down 0.1%. So house affordability, property in the UK, real estate in the US, you hear a lot of different reasons why, people talking about it. Some here in the UK, they say it's too many immigrants, or that they're not building enough houses and that the population's growing. But never do I hear people talking about the fact that interest rates are artificially low and have been for 11 years, and that the central banks, especially the Bank of England, but also the Fed, have been buying paper assets, securities, corporate bonds, in order to keep mortgage rates low as well, in order to keep the big banks in the UK from going under. UK banks' balance sheets, almost 2/3 of their assets are related to housing, be it commercial or be it private real estate, or housing. So it would make sense that low interest rates that we've had artificially for the last 11 years would keep the banks going, and would keep their balance sheets whole, and would keep the other side of bank assets are the mortgage lending, and it's of course backed by the property that they lent on. And if the value of those properties collapses, their balance sheet collapses as well. They could go under, and that's why housing has stayed so high in the UK. It's mainly because of that, and previous governments as well. The coalition government, Conservative and Liberal Democrat, under George Osborne as Chancellor of the Exchequer or Finance Minister, they've put out schemes to help people buying houses, and that makes it even worse when the government interferes. That's the other thing that people don't realize. Government interference in markets usually disrupts markets, and that's what the Bank of England is doing. Yeah, people say the Bank of England is independent now, but believe me, it's not. The other thing is, well, you let interest rates rise to normal levels in the UK, which in my opinion should be like 6 or 7%, 5 at the least. You let that happen, and you also have the government in a complete crisis, because we've gone from having 800 billion national debt in around 2010 to over 2 trillion now. And who has to service that debt? Well, it's the government. So you look at UK interest rates now, the 10-year is almost at 1%, 1.17%. This is a country that's running unofficial, I would say, inflation at 4 or 5%. So if you're a UK investor, you're getting screwed if you keep holding Bank of England notes. 5-year gilt yields are under 1%, 0.9%. This is not normal. If you go back the last 325 years since the Bank of England has been in operation, I think the average interest rate is more like between 5 and 6. So what we've had now is completely artificial. And I'll show you here, even from the Bank of England website, they've got official bank rate history. And notice how they only put the last 10 years on this chart. So a young person comes on and listens to me, and then they go to the Bank of England website and see, oh, you're saying rates are artificially low, but they're normal for the last 10 years. Well, yeah, in the last 10 years, yes. You can see that the highest on this chart is in 2000 and beginning of 2009, when it was at 1%. Then they dropped it to 0.5%. And then they used the EU referendum there in 2016 as an excuse to cut it by 25. And they've raised it now a couple of times, but it's still only at 0.75%, and you can bet they might use again in about a month's time. They might use the excuse again of leaving the EU to cut that rate again and to do more QE. But then you scroll down the page and you go back to the history of when they changed interest rates, and you can see. And then you go back into the 90s. Let's go back into 1996. Or 97, that's when my wife and I sold, we had a flat and we sold, or apartment, and we sold that, and we bought our first family, home or house, because we had a baby and the family was growing. When we bought our house, you can see interest rates were at 6.25% in May 97. So mortgage rates probably were, but I was probably paying 7 or maybe a little more. So nowadays, you can see rates are at, have been with a 0 handle since March 2009. So it's still an emergency. We're still in a crisis, but we keep telling that everything's fine. I'll show you one of the articles, the typical article about housing, and this is from The Guardian. Want to resolve the UK's housing crisis? Here's how. Our system favors landlords over communities. The PM must side with the many, not the few. So Yeah, it's the usual stuff about not having enough houses. It says the average private rent in London accounts for more than a third of household income. The bill for housing benefit has risen eightfold since the early 80s after inflation is taken into account. Housing building has risen since the lows reached during the financial crisis of a decade ago, but needs to almost double to hit the government's target of 300,000 new homes a year by the middle of the next decade. Yes, the housing market is broken, all right, and for the Conservatives, a party that sees itself as a party of the homeowner, it is a serious political headache. Well, I have to admit, my wife and I, we have benefited from this policy because the value of our house now is worth around 4 times the value of our first house that we bought in 1997, and we've moved a couple of times since then. It could have been worth more if we stayed in the bigger house. So there you go. I mean, the point of me showing you this is just to show you. I went through the article, and never did I hear that anything about the Bank of England and that interest rates are artificially low. Never in this article, and you never hear this line of reasoning from anyone in the mainstream. I mean, if the Bank of England allowed interest rates to go to its normal level where it should be, if the government statistics stopped fudging the real rise in the cost of living, or what people nowadays call inflation, we would see that we're more like 4 or 5%. Interest rate would probably be 6.5, maybe even 7. Mortgage rates would be around that level, 7 to 8. And house prices would probably be a quarter of what they're now. And people would be able to afford houses. Of course, it would. The other problem, though, with the UK, that our economy, especially Greater London, Southeast, has become so dependent on housing that if that were to happen, the whole economy would implode as well. But at least it would make housing affordable. Our economy just needs to change. It's just based on, especially in London, it's just housing and the city of London. And then everywhere else, there's nothing. The manufacturing has been completely decimated for the last 50, 60, 70 years in this country. It's now like a service economy. And also the commercial property. I haven't worked in the city for over 6 years. Sometimes I go up to the city and I walk down Bishopsgate, around where I used to work, Cannon Street, and the number of new buildings, commercial buildings, is amazing, and they're still building them. So that's another bubble, in my opinion, as well, the commercial real estate. UK housing, housing in the Western world, it's all in the interest rates. It's all the artificial interest rates of central banks. I mean, look at the ECB. They still have negative interest rates. And that's why young people and other people can't afford it. Their wages, of course, are lagging completely with inflation or the cost of living. The real, the official inflation or CPI is completely bogus. If you enjoyed this video, make sure you hit that like button. Subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. Take care. Bye.